Stop what you're doing. What if I told you a seemingly boring, old-school manufacturing stock just completely crushed almost every single hyped AI startup this year? Welcome to The Explainer. Today, we're tearing down Tower Semiconductor. By the end of this explainer, you're going to know exactly how they pulled off one of the market's most explosive financial turnarounds, and we'll figure out if there is still money on the table.
Just look at this number, 848%. Since its low in April 2025, Tower Semiconductor's stock has absolutely rocketed. I mean, an 848% return in a single year? In a mature, capital-intensive manufacturing industry, that is practically unheard of. It leaves us with a massive question. Are we looking at some temporary market glitch here, or has the fundamental value of this entire company transformed literally overnight?
Retail investors often miss these tectonic shifts until it's way too late. To make sure that doesn't happen to us, we are breaking down the 3 core catalysts driving this massive momentum. We aren't just looking at your standard revenue beats today. We're looking at a complete structural pivot in what Tower actually makes and who they sell it to, using fresh Q1 data and analysis from Zacks.
Okay, let's dive into catalyst number 1, radically accelerated profitability. Check out the shift in their first quarter gross margins. Last year, they were sitting at 20.4%. Now, they've jumped up to 26.8%. A 6.5% increase might not sound like a total game changer if you were talking about a software company, but when you realize this is heavy semiconductor fabrication, it is a massive structural shift. They're basically ditching their older, lower-margin products and swapping them out for highly profitable new tech.
And when gross margins expand like that in a manufacturing business, it flows like a river straight down to the bottom line. Look at how this translates to net profit. Back in the first quarter of 2025, GAAP net profit was $40 million. Fast forward exactly 1 year and boom, it's $65 million. That is a massive 62% jump in GAAP net income year over year. Operating income almost doubled, up 96%. So this isn't just about them pumping out more wafers. It's about making significantly more money on every single wafer that rolls off the factory floor.
Which brings us to catalyst number 2, the AI photonics pivot. This is the real engine behind those surging margins. If you look at the data, their legacy tech segments, things like discrete and mixed signal, well, they're actually shrinking. Discrete sales dropped by nearly 28%. But flip over to the other side of the ledger. Their RF infrastructure segment, which houses all their advanced photonics products, just exploded. It grew by 99.5%. It literally doubled in a single year, rocketing from $79 million to $157 million in just 1 quarter.
You can actually see this pivot playing out right in front of you. Take a look at that massive dark blue slice for RF infrastructure in Q1 2026. It now makes up a whopping 38% of their entire revenue, up from just 22% the year before. Meanwhile, all those older tech segments are visibly shrinking away. High-margin new tech isn't just growing on the side, it is rapidly taking over the company's entire revenue profile.
Now you might be wondering, what exactly is driving this insane RF infrastructure boom? Well, it all comes down to silicon photonics, or SiPho. Just to cut through the industry jargon for a second, this is a technology that uses silicon chips to build optical circuits. So instead of moving data around using electricity over copper wires, it transmits data using lasers and light. It's lightning fast, it's incredibly efficient, and most importantly, it serves as the critical hardware backbone for modern AI data centers. If you're ever wondering why AI stocks are going crazy right now, it's because companies desperately need this exact physical plumbing to move their data. And this insatiable AI demand creates an almost unbelievable scenario for Tower's future. Let's look at this number, $290 million. Now this isn't past revenue. This is cash that customers literally handed over to Tower in Q1 as prepayments. Customers are giving them over $250 million right now, today, just to guarantee they get their slice of the photonics pie way out in 2027.
The analyst from Zacks Small Cap Research hit the nail right on the head, noting Tower is capacity constrained, and demand will outstrip supply for certain products. Now, the ability to prepay for supply has always been an option at Tower, but it has never reached anywhere near these levels. These massive prepayments guarantee at least $1.3 billion in product delivery for 2027. Basically, customers are so terrified of hitting an AI hardware bottleneck that they are willing to finance Tower's operations entirely upfront just to hold their place in line.
And let's be clear, they aren't working with small speculative startups here. Tower's recent partnerships totally validate them as an undeniable force in the market.
They are scaling silicon photonics for NVIDIA's networking protocols. They're expanding with Xanadu for fault-tolerant quantum computing. And they're working with Coherent on crazy fast 400 gigabit data transmission. These are absolute heavy hitters requiring world-class technology, and they're all relying on Tower.
So what do you do with all that demand? That brings us to catalyst number 3, scaling capacity fast. When you've got customers throwing $290 million at you for future orders, your only real hurdle is how fast you can build. Tower is currently sitting on a massive cash pile of $1.5 billion, and they are putting it straight to work. They just announced a $920 million capital expenditure plan specifically to expand their capacity for silicon photonics and silicon germanium across their fabs in the US, Israel, and Japan. They are buying up equipment, snapping up fabs, and pushing to increase their SiPho capacity by 5 times compared to their Q4 2025 levels.
Now, to be completely objective, it is also absolutely crucial to note a recent legal development outlined in the Zacks report. In March 2026, GlobalFoundries sued Tower Semiconductor, alleging infringement on 11 manufacturing patents. GlobalFoundries is seeking action in U.S. District Court and has even filed to block the import of certain chips into the U.S. We're not taking sides here, obviously, but this is a major variable in the company's landscape that the market is actively monitoring right now. Setting that lawsuit aside for a moment, let's look at exactly where management expects this massive build-out to take them. When this new capacity hits 85% utilization, they are projecting a gigantic step up to a $2.8 billion revenue run rate. And if we work backwards from that ambitious target, their model projects $1.12 billion in gross profit and a stunning $750 million in net profit.
The absolute secret sauce behind this massive surge really comes down to the sheer power of operating leverage. Check out these incremental margins. For every new dollar of revenue Tower brings in under this expanded capacity, they expect 59 cents to drop right to gross profit. Because their fixed costs are largely already covered, a staggering 42% of that incremental revenue is expected to drop straight down to the net profit line. That is exactly how an 86% increase in revenue from their 2025 base is projected to yield a mind-blowing 140% increase in net income.
Which brings us to our final thought. Today, Towers trades at an enterprise valuation of about $29.1 billion, which is roughly 12.1 times their estimated 2027 sales. Sure, that's higher than your traditional foundry peers, but traditional foundries don't have customers prepaying hundreds of millions of dollars to secure AI capacity years in advance. So the big question I want to leave you with is this. With the stock up 848% and a completely transformed business model, is Tower Semiconductor fully priced to perfection today, or are we just witnessing the very beginning of their AI runway? Thanks for joining me on this explainer, and as always, keep questioning the numbers.